Hi, good morning, everyone. Thank you for tuning in. We'll start in another couple of minutes. Sorry, I had some technical difficulties, so I'm starting a couple of minutes late. Give me another couple of minutes, please. Just sorting something out. Yeah. We'll start at 12:05. Okay. Thank you. See you in a bit. Thank you for waiting. I will start right now. Thank you for tuning in. Good morning once again. We'll start with a very quick preparation for the week. So come, let us prepare, make some profits for the week. Let's do some quick recap here. This simple recap, very simply, you have to understand why the squeeze happened. And if you remembered, we talked about the squeeze plenty of times throughout the week, and one of the key indicators is the 5-day trending up together with the upper Bollinger right here, as you see it for yourself. Now it's important that if you have not, or if you're a new member here watching this, you have to watch the previous videos. The links are in the description. You have to watch the previous one, and that links to my thought process to the one before and the one prior, and you can understand the context as we link it up as the market moves. Now, many things seem to be easier to study on hindsight, but that's not a point in trading. In trading, you must learn to be preparing ahead, and with that preparation, you must know how to make certain trading decisions. So it's important you watch the videos that I make every day, and I appreciate you if you take the time to do that. And because, as I mentioned in the previous video, we had one market cycle. In my opinion, this is one market cycle, because we have retested the upper Bollinger, we have retested the bottom Bollinger, and we had a tremendous bounce. Now this will make more sense to you if you watch the videos. And as I mentioned, this is a great opportunity for learning, because within a month, 6 weeks, a month and a half, we were able to experience one entire market cycle in the trading space. What a great opportunity. So the best way to learn this is truly to watch the videos day by day. You can check back from the video prior to this. Trust me, this is the market opportunity for you. If you're not making money from the market, that's fine. But if the market presents to you a learning opportunity like this, you have to seize it. So please do watch the videos. If you are truly serious about this, you have to watch it. Now, members, there is end of day summary every single day. And if you can tie this up, you can tie up my daily analysis together with the intraday videos that I create and put them together, understand the thought process better. Now this will be spectacular for you. Right, so please do that. And this is why, if you trade with me daily, now if you show up daily, you catch the videos daily as I post them, you run through the end of day summary together with the live analysis every day as I review them, right? It doesn't take too much time for you. You don't have to spend 6.5 hours at the trading floor. This takes less than 30 minutes a day. I keep my videos short, less than 10 minutes per video. Together with the end of day summary, if you take 30 minutes a day just to show up, you will catch up. So this is the point of why I'm doing all this. So when you can understand the process behind this, this will be such a great learning opportunity for you. So please do that, and you will understand. You will very importantly understand how I was explaining to you on averaging down, if you can, off the bottom Bollinger. Obviously, you don't full pot as much as you can. Right, I talked about that. I talked about how when the 5-day starts to plateau, yeah, that's a good sign. I talked about how the upper Bollinger has to start trending down, so that's a good sign. I talked about how the 5-day starts to trend up and crossing about the 20-day, and this here was when I talked about the 20-day juicy liquidity. If you track back to the video, then you will see it for yourself. And thereafter, once we started pushing, I told you that there is a possibility of a squeeze. And we caught the squeeze right here on this day, because you understood some of the very key intraday algorithms, which I will run through them later as well. And I also review the intraday algorithms in the 1 minute chart on the daily videos. So that helps you understand how you can use the daily chart, translate it into the 30-minute chart, macro structures, and translating it into intraday. And how are you supposed to maximize your profits in the various time frames? And you learn to use different forms of weapons for your trading. You have a very good repertoire of your trading skills. You have a very strong arsenal, and you're able to be deploying the skills in a different fashion when you're trading. So please, if you have the time, I do truly believe this is such a fantastic learning opportunity. One market cycle within a month. That's fantastic. You have the opportunity to experience this. The next best time that you were experiencing, I'll tell you this, truly from the bottom of my heart, people who started learning trading here, this is the worst time to learn trading. This is the worst, because in a bull market, everyone thinks they're a genius. The people who picked it up here, they will struggle. They will eventually struggle. The best time to pick it up was actually, if I'm not wrong, this time here, 2022, 2023. This was the best time to be picking up trading. It is the best time. If you picked it up there, you would have experienced, well, firstly, we've experienced lots of volatility, right? And if you were very diligent in putting in the work, you would have also enjoyed the bull run. So this best time for many different reasons. Yeah, so please do spend some time to do that. And I will talk about this very importantly now, because I talked about a major seller right here. Right, remember this major seller here? This is important. I told you the major seller will probably appear this coming week. I told you it will not happen on Friday because they want to expire everyone out, and you see it happen for yourself, right? It will not happen on Friday. I told you they have to expire all the puts that were placed in the market. So this is context. If you're a new trader, you learn to piece together context. With my experience, you hijack my experience, and with your own personal experience as well, as you trade along with me, trade along with people in the community, you learn and you record everything you learn. You develop a strong trading brain, right? So this is context. We know that's going to happen partly because of context. And I mentioned if they want to dump it, well, not really dump, but probably a 5-day retest is coming, right? Because 5 days catching up, right? Both bulls and bears will want to do that. And you realize just on Saturday, this happened, right? So you understand, even insiders, even insiders, they want to use liquidity. Remember, I mentioned it's easier to swim together with the current than to swim against it. It's the same. It's the same for the insiders. They want to do that. And that's why we are able sometimes to pick up some clues with liquidity in the market. Now, we'll talk about that shortly later. But generally speaking, you have to be patient to wait at least 4 to 5 day moving average if this wants to pull back down, right? So this is important. This is truly very important. You have to understand this. Now, at this point here, I think the bottom Bollinger will start to trend up slightly now for a larger downward movement, right? For that to happen, I do think at least the bottom Bollinger must return back to above where we were at the low, right? So it's going to take some time. So what does this mean? It means that if you're taking, for example, just gambling away 630 puts, you are throwing your money away, right? Especially if you're doing short term. If you're doing long term, you can afford to wait, right? It's better to take a spread instead, because when you take a spread, you protect your position, but yet you can still take the long put if it heads down, right? So you cut off your losing leg and you allow the long put to head down. So spreads are a skill that you need to learn eventually for that, right? And you noticed, as I mentioned, 200-day moving average, right? It's still up there, and if this happens, you have time to catch the downtrend, right? So just be more patient, right? Don't be just shorting this now. Some of you just do things as a cause and effect, which is, it's simple, yes, but it's not logical. It's you simplify trading too much that it becomes illogical, right? If you want to simplify something, the basic premise of simplifying something is that it still must remain logical. You understand that, right? So simple doesn't mean that it's logical or it's right. So likewise for your life decisions, right? Sometimes we simplify our life decisions, right? We allow the impulse or our poor instincts to take control, and they are no longer logical. So you have to at least have the baseline that your decisions are at least logical. People short this because they think that it's buying too much, right? It's too green. Too green, therefore short. Please tell me this is not the right way to make trading decisions. So in your mind, you have to be logical, right? And that means when something is logical, when something is rational, it means that you must be able to base it on, well, in mathematics, what we call the formulas, right? You must have formulas. You must be able to formulate something. You must be able to have metrics. You must be able to plug in numbers. You must be able to equate something. So that's important. If you lack different variables, and that's the thing about equations, right? So, well, if you back to high school math, yeah, right? So you need to have, well, let's just do a very simple polynomial, yeah? Just a very simple polynomial, yeah? Right, very simple. You just have to learn to plug in, right? So you definitely need both sides of the equation. And the point is that you need to plug in your variables. When you're able to plug in your variables, you're able to equate something. Now, life is a mathematical formula. Now, polynomials are well, it's a very general term, but life is not as simple as this simple, very simple polynomial. You must, but yet it's made up of variables. So when you can simplify life, you simplify life by reducing as many variables as you can. It's the same as trading. In trading, you must simplify your variables. And this is why it's as simple as a structure, for example. You know when your entry is, you know where your stop loss is, you know where your protection is. Done. As simple as that. And you know where to take your winners. It's as simple as that. But yet, these simple variables are illogical. Many people, their entries, they are arbitrary. It's random. Many people's stop loss, it's random. It's based on their P&L. It's based on a number that doesn't matter on the charts. When do you protect? It's also arbitrary. And you realize it's an illogical equation. So the point is this. Apart from simplifying something, right? And simplifying something means you must have the variables plugged into your equation. You simplify as many of your equations as possible. And then you must make sure they are not arbitrary. They must be numbers that you can be able to dictate or find out or equate. Now, when you understand that, right, and you realize how important now math is. Now, math is not just about solving equations, right? It's a way of life. It's a systematic thinking. It's a problem-solving ability. So it's important. Yeah, it's important. And when you're trading, you cannot escape numbers. You cannot escape systematic thinking. You cannot escape arithmetic. You cannot escape, well, obviously, I don't think you'll be doing, about trading options, it's calculus, right? So you don't need to know all that. But the general approach of this, you have to understand that this is a way of life. It's the system of thinking. And when you can be able to do that, this becomes very easy to master, because you have put in the proper template, and all you got to do is to plug in the right parameters into that template. You understand that, yes? So now, at this point, let's talk about what's coming up for the week. Now, at this week now, we'll talk about first, at this point, I've always mentioned to you the blue algorithm. It's obvious the blue exists. And how do you tell? Because we have been building liquidity here, and it bounced back up strongly from that blue, right? It happened here again. This also happened, right? You can see the very clear blue, and we see the bounce from there. So this blue algorithm is there. They were controlling that. Now the selling only happened here on that day, right? They exist. This seller exists. In fact, I want a stronger seller. There is a stronger seller, but very briefly, not even meaningful in a 30-minute chart. Not even meaningful yet. So if this wants to head down, and you cannot be trading the news, because the news, as I mentioned in the last training video, the news is always either too early or too late. And how do you tell? You see, that's another arbitrary factor. Because you look at news as just the news, but you ignore the time of the news, the timing of the news. So we look at things in one dimension, but the market reacts in things in 3-4 dimensions. I talked about this in a previous video. So if you remember the talk about dimensions, right? So this is important to shape your thinking. To shape your thinking about how you view the charts. It's not hard. You don't need all these advanced knowledge. You just need to learn to simplify things and be logical in your simplification. That's it. How simple can this be? We're trading only one ticker. Only SPY. There are day traders I know that are just scanning stocks, and you realize how much more arbitrary that becomes. How many more variables that creates. How much more difficult it is for them to stack their skills to get better each and every day. When you have too many variables, you cannot build it up. But by trading, you see how I try to simplify this. It's as simple as the 4 variables that I mentioned earlier. Your entry, right? Your stop loss, your protection, and how to cut your winners. Or in this case, as I always mention, nurturing your winners. Using only one ticker. This ticker here, SPY, can help you trade the ES, help you trade the SPX, help you trade the QQQ, the NASDAQ, or even some mega caps, right? Some of you use this skill to trade Nvidia, trade Tesla, Apple, Microsoft. You realize it's stackable. So now, let's talk about. I'm sorry, can you hear me? I'm afraid I muted my microphone. Can you please just let me know that you can hear me clearly. I don't have any technical difficulties. Yeah, all right, thanks. That's important. Just imagine I'm rambling and rambling and rambling, and all you hear are crickets. Just imagine that, yeah. But anyway, thank you. Thanks for a response. Now, let's carry on. Now, at this point here, you have to understand where we're going to go. Right? The blue algorithm here. I talked about this blue algorithm here. You see the different stages of the blue algorithm, isn't it? But what's important is the orange. You have to pay close attention to the orange here. Now, the first layer here is when your 5-day moving average is going to meet. Right? The first layer here, if this truly wants to head down, I've always told you, you are not going to miss it. So many things and confirmations you can wait for. Right? The first one will obviously be the orange here and the blue. Right? Together with the 5-day moving average, you will not miss it. You will see the orange seller at least appearing, and in the midst of the orange seller, you will see the green seller appearing briefly, hopefully briefly. But if you're day trading, you want it as sustained as possible. Right? So level by level, algorithm by algorithm. Now, as you head down the level, you will see cups starting to close. So the next cup that needs to close will be the 697 yellow. This is a very, very important level. By then, you will see your blue algorithm starting to get retested again. Now, I don't know whether it's going to happen on Monday, Tuesday, Wednesday, or we even get there. But you prepare because you know the liquidity is there. By then, your 5-day will already start to turn into resistance. Now, when this happens, your 5-day will start tapering and start trending down. When it starts to trend down, you know, well, there could be a sustained downside. But remember how to be looking out for the sustained downside. You have to be looking out for that bottom Bollinger to start heading up. Becomes an easier target if the bears want to go back and revisit it again. So we've seen this many, many times, right? In every uptrend, right? Okay, let's use some example here. In this uptrend here, you see how the bottom Bollinger took some time to head up, right? Once it started heading up, it becomes an easier target. You see the pullback happening to the 20-day moving average, right? It started moving up again, and it started retesting the 20-day moving average. And it started trending up again, and it started retesting the bottom Bollinger for more liquidity to push up. You notice, bottom Bollinger 2 has to catch up, because otherwise, there's a lot of buying in this range here. How much buying is there? How much buying? Your 200-day moving average is still there. Your 20-day moving average is going there. This is liquidity. This is liquidity. We've not even talked about the 5-day, which I talked about then. Liquidity, liquidity, liquidity. So some of you, you're wasting money trying to bet for a crash. If it comes, you will make money, believe me, instead of just wasting money before it happens. Right? And some of you just wants to call the top. You cannot call the top reliably, especially when it's in the strongest algorithm. I've talked about this many times as well. How many times have I told you if it's buying in the strongest algorithm here? And this is why I told you the green was very important. If it's buying in the green and you are shorting this, you become exit liquidity. The term exit liquidity means that you allow the buyers, which is so much more in volume than the sellers, right, to buy up your share. Because you're shorting this, they buy you up, and you continue to head up. That's the term, that's the definition of exit liquidity. And this is why you see the squeeze happening. So I'm trying to explain the squeeze in terms like that. Right? Now, if this wants to dump, you truly, truly will not miss it, because we have another very, very major liquidity level here. This is major. Now, anything that wants to head down will have to pass through this blue liquidity before it heads down easily. Your 20-day moving average may take time to start trending to there. It will get there eventually. Does it mean we head down when the 20-day meets this liquidity? No. but it's ideal. If they have a way, an insider, alleged insider, or they have negative news they want to release, this will be the best time to do it if that happens, instead of doing it now. Why fight the current? If they truly want this to head down below, they will let it wait. They will allow it to wait, because you don't want to be fighting the 5-day together with the 20-day, together with the 200-day, right? Now, upsides, however, now we've completed the talk about the downside. You understand that now. Let's talk a little bit about the upside. Unfortunately, you cannot chase as well. This is great for runners, and that's fine, right? We caught it here. We caught it. Now, let me explain where we caught certain trades here. We caught it at the bottom Bollinger several times. You averaged down. That's fine. You caught it at the 5-day when it turned support a couple of times. You caught it when the 20-day liquidity was very obvious here, right? We caught it here. We caught it here at the other 5-day retest once. We remember that day when we were talking about soaking up sellers, right? Let me just find that day. This day, right? We were talking about soaking up sellers. You have to watch this Wednesday's end of day summary together with the video. This is a very important day. This day, you would probably have learned so much more because the market gave you an opportunity for you to learn. This is a very important day. You have to learn, right? So let's watch this. This video is very important because you notice we had that very large bounce up here. This helps a lot. Now, from then on, you have to understand. Yeah, get out of here if you don't want to be watching this. Don't waste your time. Don't waste your time, yeah? If you don't want to learn, that's fine. Or you can have your audience for your own. Go, start your own stream or watch it. Now, at this point here, you cannot be chasing. You truly cannot, because there are plenty of opportunities already here. You see it for yourself. Go watch the videos. You have very clear opportunities already. At this point, you have to wait for structure. This has been trending up. It's great for runners, right? If you're taking very large positions, you have to be very careful. On a day trading basis, that's fine. But you realize as we approach Thursday and Friday, right, members? When you realize as we approach Thursday and Friday, I started scaling down very, very large. I scaled down quite a bit because it's chasing. It's a sort of discipline you need to have. If it lacks structure, as I always tell you, if it lacks a key structure, now this was a clear structure, right? This was clear. This was good. But as we lack structure, you have to start scaling down. That's just how it is. You want to see that the orange starts to show a little bit. You want to see that the magenta start to show. 5-day showing some strength before this starts heading up here. So wait, be careful, be clear on the structure here as well. Now, last week was an obvious squeeze because there were lots of short liquidity. That's why there's a squeeze, right? That's why when there is an overbuying event, right? So many people say, it's overbuying. You can short this, you can short this. So the point about overbuying is that there is just so much liquidity, especially in with the monthly options that are expiring. So when people start fueling it by shorting it further, they have to cover their positions, right? So when you're a short seller, you have to cover your positions. How do you do that? You buy. Or when you get margin called, what happens? You buy. And that's what it means by having a squeeze, because even the people who intend to short, they have to buy. And that was a one-time thing because there was a positive catalyst into the market that on a week where monthly options are expiring, in a week where people shorted this heavily, and we had all the liquidity clues that I was showing you. So once again, back to the start of the video where I mentioned this. When you're able to learn context and link it into your technical analysis, this becomes so much clearer for you. And this is known as your trading brain. Develop it. You have to do this through experience. Hijack my experience. Trade and show up every day. This is the way to accelerate your learning. You have to think of learning as a form of acceleration. What are the logical ways to accelerate your learning? You have to be realistic with learning, right? Like flying a plane. You can't rush it. You can't just watch a video and then start flying a plane, for example. So you have to understand there are ways and means to accelerate the learning. So for example, you fly every day. You practice every day. If it's not on a real plane, at least on a simulator. Or as they always say, mental flying or chair flying, that's also one technique. So the point is, there are ways to accelerate your learning. Or you start to watch others do it, right? So now with YouTube, you can literally watch other people do it, and that's one way of hijacking experience. So we live in a world today where you can literally hijack another person's experience. So spend your time wisely and hijacking other people's experience, hijacking other people's knowledge, instead of watching brainless stuff that will deteriorate your brain. Right? So now, very importantly, you understand we have to wait for structure. Monday, allow the market to build liquidity. Now remember last Monday that happened, right? So let's zoom back into Monday. And I told you Monday, Tuesday. Well, Monday is actually a good day, right? The entire week we were just squeezing, right? And I was warning. I was warning throughout the week not to short this because the context was there, right? You prepare to short. You prepare for the possibility to short this, but you don't do it. But anyway, Monday, if we start building liquidity, I'd like to see that, right? I would want to see 5 days start to build liquidity. I would want to see the liquidity here starting to build. If we do start to chop within the range here, this would be actually ideal as we approach the week. So on Monday, just be a little bit more careful, right? Allow the liquidity to build. I know there will be knee-jerk reactions right at 6 p.m. Wait for Asia to open. Wait for London to open. There will be a lot of volatility on Monday pre-market. So if you're trading Monday pre-markets, promise me just scale down. Don't start your week and ruin it immediately before the US market opens. Can you imagine that? You ruin your week before even our market opens. Imagine that. Don't do that, all right? So allow liquidity to build. We have the entire full week to be making profits and finding profits in the charts. Yes, I understand that, yeah. All right, so you're prepared. It always comes like that in the squeeze. You see it for yourself, right? There will be pullbacks, right? These are your red candles. It will come. But how many times have you seen after a squeeze that it goes straight down back to bottom Bollinger? How many times? See it for yourself. This one only, right? When was this? October 10th. Only this. When that happens, I'll review October 10th again. But when it happens, you will not miss it. It will be a trend day. You will see and that's the beauty of what we're doing here. You will see the control algorithms at work all the time. Now, I will label soon. I will start to have labels for the end of day summary. So, for example, trend days, I will label them trend days, right? If there is a clear head and shoulder pattern, I want to start labeling them. So I'm using some AI tools to help me with that. I think it will be great if I start to include tags or categories into the different trading days. So you see, I'm trying to deconstruct the information a little bit more. Right, so you see it happening. Yes, but rarely. And it's always when the bottom Bollinger has already caught up. The only time if this heads down back to the bottom Bollinger, you and I should be really worried if that happens. Right, because the stock market should be the last thing on your mind, right? If this happens, right, something really bad will probably have happened, right? And obviously, the market will be halted. So don't worry, allow the liquidity to start catching up. And this is why part of the trading is this, that on the 1 minute chart, right, we want to find profits in the charts every day as well. So we've got the solution for that. And I've always taught you that even in the 1 minute chart, you just need half a point, 1 point. If you are able to find profits in the charts with that sort of precision. And I just want you to see on Friday that we are able to identify this. And tell me, in what world are you able to precisely determine the movement of a stock that has hundreds of billions of capitalization, of liquidity every single day, that you can control it in a way to the penny of how it moves? Look at this yourself. And this was only because we are able to identify the pink and magenta. You identified the wedge, you would have avoided trading this, and to the point that you can even see that it has went to 0 point, literally to the penny in this wedge here. When you can do that, when you have the power to do that, when you have the ability and the skill to do that, you can do so much more on the trading floor. You can take precision trades. And there is actually a precision trade I want to talk about here in the second part of the video. Right, so this is just the early prep. You have to understand how to be prepping yourself in your mind. Right, a very simple review from last week. And obviously, I'm prepping you for the macro structure here. And this is just the primer, because I'm going to prep you every single day as well. As the market opens, as we trade, as you prep every single day. This is why I mean, just show up, right? Even if you don't understand 100% of what I'm talking about, just show up. You realize you get better and better at this. Right, so let's deal with this together. We are in this together. I'm sure you're not the only one showing up. In fact, I think I'm showing up more than you are. So let's do it together. This is why we show up for each other, and that's why we work hard for each other. All right, now I need to take a short break, and I will run through some very important lessons I want from our analysis every single day. Right, so give me a 5-minute break. I will be back, and we will go to the second part of the training video, where I will run through some very important trades that I took on the week. You will learn something very important, right? So stay tuned. Just go get a toilet break, get a cup of coffee or something. I'll be right back. Give me, let's see. Give me 5 minutes, yeah? Thank you. I'll see you shortly. Okay, guys, I'm back. All right, let's go. I will run through every day from Friday to Monday. Let's see where this takes us. Friday was quite a straightforward trade. Now, there are two things that you have to learn from Friday. I'll do this in conjunction with the end of day summary. So if you can go through the end of day summary, it will help you, right? Especially when I give you a snippet of where the analysis is. So it works two ways. The first way is that you get more acquainted with my style, especially with my language. So the next time as you trade along with me over time, when I say certain things, you are able to, in a way, treat it like a signal for yourself, or a warning for yourself. So it gets to the point that we become telepathic, right? So that comes with obviously playing with each other long enough. We're teammates right now. We're teammates. But we have to practice together. We have to train together. And then I will know you better. You will know me better, right? So you know immediately when I just do a little small move, you can anticipate what I want to say or do. Likewise, me to you, right? So this is also important why you share your trades. When you share your trades, I know you better as a trader. And when I see certain things, I can immediately highlight them because I already know you enough. So this is important why you have to share your trades. All right. So understand that and let's go. There is this one very important trade here. I just want to bring it up. All right. So once again, the wedge. Do you see how beautiful that is? You have to chart diligently because you don't know when it will be useful, right? So for example, this magenta, sometimes I ignore that, I ignore a base support, but you see how important it turned out to be right near the end. So just chart it. You don't know if it's useful or not. But once again, chart it if it's meaningful to you. If it clutters your chart, then don't do it. If it confuses you more. So you realize, for example, as well, you see, I don't have to connect it from the start every time, right? You already know the magenta exists. You can just place it midway. It's the same magenta algorithm. It's the same buyer that's controlling the liquidity there. Right, okay, now, what I want to say is that you don't trade the wedge, right? If you can help it, this was actually quite a good trade. Once we had that orange precision on the breakout. I was just reviewing this. I didn't take this trade, and I actually dissuaded you from taking a final 10, but this was not too bad. I reviewed it. If I'm not wrong, this was a 3 or 4x trade here. There are few conditions, although, not just on structure. A few conditions. The first condition was IV was quite low. All right, so what happened was that you could get something that was quite worth your money that is already in the money. Right, so I drew a very simple example here. If I'm not wrong here, this level, which is around 709. I don't know the SPX equivalent at this point. But this strike here, this call, let's say a 709 call. Firstly, you have very strong supports, right? Not just magenta that's trending up, but also that this has supported for quite some time, 3 times at least. This was quite a good price. If I'm not wrong, it's about $2 to $3 for SPX. So that means it's about 20 to 30 cents. Right, it went up to $1 if I'm not wrong. Maybe 80 cents to 90 cents or $1. I could be wrong, but I was just reviewing the options chain that day just before close. So I saw it for myself and I thought, hey, it's actually not a bad trade because you are taking something already in the money. This doesn't expire worthless. And you have very strong supports to block you, to protect you. You had a wedge that closed. And it started buying in that precision, in that orange here. and the IV was quite low. So that's why you get very good value. You could buy something. I could be wrong with this. It was in the money. I remember it was in the money. I got something in the money. You could buy something. That's pretty good deal, isn't it? A 20-30 cent trade. For SPY, obviously, this. But if it's SPX, it's about $2 to $3. I think it was $2 to $3. I wanted to fill it, but I couldn't, right? I wasn't prepared for the trade. So yeah, I didn't take the trade, right? And it went to 10, 8 to 10, 8.50 to 10, I think. That's what I saw anyway. And I remembered quite clearly because I told you not to take the trade. But, I reviewed it and I realized IV was low. It was quite a good value. So what can you learn from this? You could learn that firstly, if IV is low, implied volatility is low, it means that you could have quite a good trade because within it's the possibility of entering into a strike. This went up to 2 strikes, right? So up to 7, even more than 710. It's close to 3 strikes here. So this is three strikes here. You can get it in the money at very good price. In this case, remember when I talk about absolute value as well, when you understand your stop loss, will your stop loss be less than 20 cents? Absolutely, isn't it? If you're trading something and your stop loss is not even, it's less than 20 cents, then it's too tight. But this is a good trade because this entire value is your stop loss. So you have no stress. You can just open the trade, which is in the money. It's in the money. If it's out of the money, I can understand, right? It means it's not at strike yet. So there's a possibility it may go to 0. But this goes to 0 if it doesn't work out. You understand the difference? If this stays at status quo, this will have value. Or if it goes favorably, you will make money. So you are not fighting against time. In this case, you're not fighting against time. You're just fighting against the direction. So yeah, the final 10 minutes trade, it's structurally, it matters. So structure, you realize structure is still important because you need the precision algorithm. In this case, I'm not really keen on orange, right? But you do see that glimpses of the blue that appear here, right? There was a blue algorithm that appeared here. So this was a precision. This was a precision. So orange is not bad. So the presence of a precision algorithm, right? The presence of the wedge, you have a very strong support, and you could get something in the money that's within your stop loss. You understand that, right? So it's not a bad trade. It's not a bad trade here. So if you're intending to trade final 10, which I think if you have certain aptitude, you have certain training, you have certain skill, the final 10 can be quite a good mix into your trading strategies. Because firstly, your risk to rewards is high, but your trade selection must be truly elite. Because not just your trade selection, but even your fortitude when you take a trade, because you will see that the numbers will just be going absolutely ballistic. You will never get a good fill, never, and you may not even close your trade properly. It's not easy. You have to practice this. Trust me, you have to practice. There is a reason why there's a skill level to this, because with better skill, obviously, you have the possibility of making more with your skill. So this is important, right? This is very important here. You have to understand this, all right? So now, let's see. There's another trade here that was quite important. I want to highlight this. Yeah. Now on Fridays, please remember this. I always talk about this. The first time hearing it, listen. If this is not the first time, you see it for yourself again. I always like to call this move the intern move, right? There will always be an intern on Friday afternoon because everyone else will already be out of office, enjoying their weekend early. So the intern will always be the one that's responsible for pressing the button. Now I'm talking all this as a casual joke, all right? It's not exactly like that. It's figurative. So, but you understand what I'm trying to get at. So the intern will always make that one big move, and then the market will start chopping. I want you to pay attention. Fridays, if it's not a trend day, if it's not an obvious trend day, it's always like that. One big move, or in this case, the take profit move, and then it will chop for the rest of the day. So pay attention to that, and you'll see it for yourself. So it's important on Friday to identify the wedge, because once you have the wedge, things become quite easy for you to identify and see. All right. This move was not out of the question as well, right? Because you already saw tapering happening. Now, the real question is, when do you properly take this move? I charted at that point in time, if you remembered, I charted the teal, right? I charted the teal, and you could have taken, you should see that, firstly, the break of the magenta here. So this was quite a key liquidity that we were waiting for, right? And if you truly wanted to take a trade, right? If you didn't take this trade, that's absolutely fine. You absolutely missed nothing, right? But if you're ready to take the trade here, yeah, you could see the teal was still in effect here, right? You could have protected the runner, and it's still a pretty good trade, right? You see this again. This is also another beautiful trade because you break out and you retrace. And this was to grab the liquidity from here. So exactly as it happens, right? A breakout retrace here. Once again, with the teal that's forming that precision algorithm there. So magenta was quite important if you understood how to be identifying it. Now, by then, you would have already identified magenta without me. You could do it without me, all right? Although we identified it really early, but you realize you could do it without me too. So chart diligently, and you will be able to catch some trades here. This is 100% trade, I think. I'm not sure. From the looks of it at 1 p.m., I am quite certain with the precision of the teal, this is a very lucrative trade. In fact, I believe this could be even 2x trade here. This could be 100% trade here, right? Do check out yourself on the options chain, right? I'm just speaking with some experience. The same way that this is a 200-300% trade here, right? So a glance, you know the time and the IV. So understand this. Pretty good trades here, right? So trade selection, there are a million ways to trade, right? I can provide you the framework for what to be looking out for, and that is the algorithms and the larger, safer structures. But you have to practice and find your edge. For some of you, and I know this because I read all your trades. I review all your trades, every single one of them. I just read through them and I try to understand you better, right? Eventually, I will be using AI tools to start summarizing every single one of your trades, right? So it becomes an archive that is tagged to a certain user. But you know, with AI now, it becomes so much easier for us to do that. But AI needs hard data, so you need to provide data. Then I can help you. But I know for a fact, some of you thrive on single candles like that. Some of you trade just one candle and you're done for the day. You make enough money. One candle, that's all you need. And that's great. Do you see the power of the stock market? That you literally can make money in many different fashions, right? People who suffer are those that need to have a 5-point move in order to make money. You're not trading enough, not truly. Especially if you're trading 0 day to expiry, you don't understand the parameters of the risks that you're undertaking, right? I'm sure that people that benefited from this entire move up here, right? And that's great. You should be, if you can control your risks. So if you're owning stocks, for example, and you enjoyed this, yes, that's the right way you're trading. You're trading right with the appropriate risk management. But if you're trading 0 day to expiry and you're taking, when we open, you're taking 7-11 calls and just holding and hoping, you got lucky today. It's as simple as that. You got lucky. If you're holding something that's 5 points out of the money for more than 2 hours, you got lucky, right? Because you don't truly understand. Well, if you did it with structure, with the orange, you understand there's an orange buying algorithm and you held it. I wouldn't suggest you to hold 7-11. I've talked about this in a trading video, right? If you open the call here, you may even lose money here, even if it went 5 points up your direction. This was in another trading video. Go watch it, right? We have hundreds of hours of videos now, training videos. You have to watch it, right? So understand that. Okay, apart from trade selection, right? You have to identify your edge by practicing. Practice. So paper trading is a practice. You do it with very little risks. The only risk you have is wasting your time, which is fine because you're learning. So it's not truly a waste of time. It's a waste of time only if you're not learning, you're just practicing as a form of gambling. Then you will think paper trading is a waste of time, right? Then after you paper trade enough, then you proceed to less risks with valuation accounts on funded trading platforms. That's one way you can do that, right? Or you start trading SPY, just one contract, and you can see it for yourself, and you just pay as little money as possible, losing money to the market. That's one way to do it. Now, Friday, anything else I want to talk about? Yes, thin liquidity, right? It happens. I wanted this. You remember, I wanted this, or a larger structure here, right? This is still very beautiful inverse head and shoulder pattern. It still is, right? Especially with the green buying. So yes, you can take a trade here. Now, this was the first trade of the day, so obviously I wanted something deeper. It didn't happen. That's fine. And this is what you understand from the market. If I'm not wrong, I wanted to take a call here. Let me just check it. Yeah, let's check it. Let's check what I said. Yeah, I did. 1027. Yeah. Yeah. So you see contextually, this is once again context, right? Right. So this was the context. We lacked that structure here, right? I wanted a deeper one. It didn't happen. Right, so this is a sign that the buyers are pretty strong, and you see that the orange was starting to buy. When you see the orange starting to buy and you already see that the pink is building sufficient liquidity, especially you see at this point here, it's already building pink as some form of support here. So you have very clear stops. Right, orange is a clear stop. Pink was also quite clear here. And there was actually a very beautiful bottom wick here for that beautiful inverse head and shoulder pattern, right? Very thin structure. So I mentioned if it's not a Friday, I would have taken a trade, right? Now, when it comes to trading, as much as possible, try to take the trade. Practice. You don't have to be real money. You do it on a paper account, so you have to open both your paper and your real money account together, and you make your trade selections. For you need to build this discernment to be able to understand what's a good trade and what's not a good trade. You understand that, right? So you practice, you scale down. So if you see trades that have higher risks that you need to scale down, what should you do? You take it in a paper trading account, or you start to have massively scale it down. You understand that now, right? Now, once this happened, there was another beautiful trade here, actually. This was actually very beautiful because, let me show you. Once you charted this magenta, do you see how beautiful it is? Do you see? It retraced back to magenta as support and as pink as support as well. Breakout and retrace. This was actually a very beautiful trade. But you should take profits here instead of letting it chop you. Right? If you had a runner, your runner can survive the magenta, that's fine. So you have taken more profits here as well, once the orange started showing again. So once orange showed, you have to take more profits here, because otherwise it will turn to zero. Now, some of you are very, very, very inclined to just hold runners and just hope. You hope that it's a trend day. Trend day does not happen so often as you think it does. So just do me a favor, just take profits. You will be a happier person. All right. Now, Friday, it's quite straightforward. What I want to talk about Friday was this final 10. So there's some tips here, as well as the intern trade here. Right? There's some tips here as well. And understanding the wedges, especially on Friday. Let's talk about Thursday. Thursday was quite straightforward as well. Nothing great. I wasn't here half the day, I think. Yeah, Thursday was the day I had to do something quite important. What was it that I was doing? Yeah, important day. But we identified the pink, so that was great. Thursday was very clearly the magenta here. Now let's take a look at Thursday. Penny perfect, isn't it? Right, with the algorithms, it will truly, truly help you. You wanted to go long here, don't, because it hasn't crossed the pink. So I'd like to show you now, so when you see it on a different day, after a few days of rest and clarity, you see it for yourself. You see it for yourself. If you want to go long, you wait for it to turn to support. Now, as I always say, you may miss some trades because you're waiting for confirmation, and that's fine. You're going to miss so many trades in your life. There is no need to worry about one missed trade. I rather you have more confirmation, then you can take the trade better. You understand that, right? So anyway, this was a beautiful trade. Some of you made 5 figures just from this. I see it. I saw it. Well done. Absolutely well done. Right? All because you were prepared. Likewise, the same reason. You don't short this until magenta turns into some sort of resistance. I always tell you that. If you wanted to short this, what you should have done is short this at orange. Right? Or if you chart it and you see magenta here, you short this here, you must protect it by then. You do not short at a support level. People who short here, they're just hoping. If you short it here, you're hoping it heads down. No, that's not the right way to do it. Now, you still can make money by shorting this. Let me show you how. If you charted the teal, and teal's not great. Remember, I told you on Thursday. I remember telling you on Thursday that teal isn't great because the green has already shown itself. So you want this seller to break us out, not the teal. The teal, in fact, I told you this I told you to look out for the IHS of the inverse head and shoulder pattern. I told you teal was not great because it's part of the inverse head and shoulder pattern. You remember that on Thursday, right? So you have to trust yourself. When you see the algorithms here, you see this green seller up here. In fact, there was an even stronger seller in the blue. These two buggers exist. Why are you shorting this without them? You need them. You need them to short this, right? So there was a green here. Fine. It's not even breaking out. You cannot short this yet, right? You have to wait for this, for example. If you short it like that, you have better stops. Much better. But you still can short this. Let me tell you how. Say you saw the green, right? You saw the breakout here and it retraced. Let's say you shorted this at this green candle. Great fill. Great fill. Let me tell you, you would have made quite a lot of money and by protecting it before this magenta. This would still have been a what? Let's see. I'm just sight reading this. Half a point, all right. It's half a point. It's only half a point, but hey, it's good enough. You could have made some money here if you protected it by the magenta, isn't it? Yes, instead of hoping that it goes down. So you realize that it started chopping here. This is when you start avoiding the trade. But obviously, if you wanted to get into position, Look at how penny perfect the algorithms are for you to get into position. So get into position, protect your runners, and see if it breaks out. Fine. You minimize your loss if it doesn't work out. And you're always prepared for the other side, right? So if, say, you shorted this, you got into position, you protected, and it didn't work out, you lost very little money, and it started heading up to pink, you do not doubt yourself. You know that this is a failed continuation. You head straight to this. Now, I know. This looks like great liquidity for this, isn't it? Yeah. So yes, you still can possibly short this here. You get so fixated on shorting this here, you forget about the pink, right? This is why you have to prepare for both sides. People who think that we prepare for both sides, I'm just selling out. I'm sorry. Who am I selling out to? You, the profit machine? You have to understand. What's the problem with preparing both sides? I don't understand people who say that. You must have conviction to whether you win or lose. What? You're trying to make money to feed your family. What conviction are you talking about? This is not believing in Jesus Christ. What's wrong with preparing both sides? You prepare both sides so you don't get trapped like this. You understand? Yes. Prepare both sides. You see pink liquidity, you know pink, the bulls are up to something. You see magenta liquidity, you know magenta's up to something. All right? Have the conviction to make money, not the conviction to choose a direction. Right? I don't understand. There are people out there that's so convicted to be a bull or convicted to be a bear. This just tells me one thing, that you are a backholder, that you probably have such losing positions, you need the market to go your way. That's the clearest indicator that you are a losing trader. When you want the market to go a certain direction, that's the clear sign to me that you have open losing positions. But anyway, right? Get in, get out quickly. Now, when do you get out? When you see, look at this, right? You also know that the strong buyer has appeared on magenta, right? It has appeared. So you have to be very careful. If you're already looking to short this, you can't short this until... Now, let me show you how to prevent you from shorting this here. The blue algorithm appeared, right? So you do not short this until it's breaking out of the blue. So say you short this. It broke out of the blue. You shorted this, right? At the orange. Beautiful trade here. You short it here when it break out of the blue and at the orange. This is a very, very realistic live simulation, right? Where do you protect it, my dear brothers and sisters? Where do you protect this? You know there was a pink there. That was previous resistance. You have to protect it by the pink. So you see, this is what I mean by trading as structure demands. Right? Yes. And so this would have protected you if you're trying to aim for this magenta liquidity. Now, my way of preventing things like that from happening, right? It's complicated. It is a little complicated. Wow, I have to pay attention to all the algorithms. Yes. So my way of, and you realize this is what I do. As much as possible, I protect it by that single candle. Remember I talk about refresh rate? Yes, this is what your eyes can see. So once the first candle favors me, I would have protected my position. I'm safe. I'm happy. Right? I can always reload later if I want. Money in the back first. I'll reload later if I want. Right? Who cares where this is going? I want money in my pocket. I want money to feed my family. When you have that mentality, you are no longer gambling. Right? You know that you are trying to be making money. What's wrong with making money to feed your family? You do that at work all day, isn't it? Right? So understand that. Understand that. Okay? Now, so I would have protected by that red candle if I was shorting this, and I would be absolutely safe. Right? Even if you didn't go long here. How would have the algorithms protected you from taking a terrible short trade here with exposed risks? Right? Because no doubt, This is beautiful magenta liquidity. There is a possibility you would have shorted here. I understand that. Right? But how would that have protected you? And you see, with that sort of training, even if you had a bad day, your training protects you. That is the best insulation you have from a bad day. Yeah. Okay. Easy, right? Trader structure demands, if it happens, you're great. Now, say you wanted to short this and it truly went down, right? And you protected it here. Say it truly went down. How many more confirmations can you get? You can get another confirmation here when it breaks out of the pink, right? You would have seen a stronger selling algorithm appear. You would have seen it break magenta. How many more entries can you enter instead of worrying that you missed a trade? Understand that, yes? So when you are always ready, when you're always prepared, you're confident because you understand the structure, you understand the algorithms, and you're confident you know how to be preparing for the trade ahead. You are never missing a trade. You see candles, you're like, all right, they are working towards my next preparation. You do not think, I'm missing out. This comes with training, isn't it? When you're trained enough, you don't worry. You don't worry. Even a ball that's fired like a torpedo comes at you, you're not worried. You're trained to catch it. You see, it comes with training. So train, practice. This is why you're here. Thank you for being here. That's why you're here. This is why God will honor your work. You will succeed eventually. Your success is eventual because you're putting in the work. I can guarantee that because I've been through the scene, right? Success comes from hard work. I'm sorry, it truly does. Like, you think there are many people who don't do hard work and they get success? No, that success is just a means to their failure. That success will build their failure. But you and I were different, right? We work hard. Like, we're not given much things in life, but we're given technology. We're given the charts. We're given the ability to trade from our homes. That's good enough for me, man. That's a privilege. I am so much more privileged than so many other people out there. Seize it. Use it for your advantage. All right. Now back to this. Protecting, right? The word protecting. I have so many videos about protecting trades. You protect your trades accordingly. You can see my trades as well. Now, to you newer traders, if you take 10 contracts, I would suggest you protect by taking profits from 9. Just leave 1 to play around, right? Practice your runners, right? Simple as that, right? And as you get better, you protect 8, you protect 7, you protect 6, you protect 5, you get a point, right? You reduce your protection over time. But if you only can trade, say, 2 contracts, don't waste your time. Just take all profits. Why not? Just take the money. Then practice the rest of the day. Money in your pocket. What's wrong with that? Then practice. Take the money first, then practice. You can practice later. Just take the money. Right? So, it differs for everyone, right? Some of you don't need the money when you're trading. I do. I need the money when I trade. I'm feeding my family. I'm feeding the next generation. I'm feeding a lot of people. Not just my family per se, but families of the world. We are feeding them. Not just me. Some of you partake in the ministry as well. We are feeding them. I need to make money. And when you have mentality like that, you realize we're not gambling. I'm not like, I could have made 10x here. No. I take the money because people are depending on it. So you see, your mindset, it matters as well. Your upbringing, your life expectations, your requirements at life. Everyone is different. So you have to figure that out. But the point is simple. If you see money, you take it. You take money first. And you're at ease. Stress-free first. You're at ease. Then you figure it out later. And that's always been the mantra that I give to you. If you don't know what you're doing, take the profits. If you don't know what to do next, take the profits. If you don't know what to do next, close your position. As simple as that. Then, with the money in the bag or your loss reduced, minimized, then you have the bandwidth to think of what's next. Then you will get better and better and better. So don't cram up a 10 years worth of trading decision in 10 minutes. You know what I mean, right? And some of you need 10 more years of training, but you
you think you can do it in 10 minutes, right? No, that's not the right way. Right? Be realistic. That's why there are people, you're running this race with me, not just with me, with each other. There's a community. You read other people's trades, you read other people's lives. You can, in a way, be able to pinpoint yourself at a different stage where you're at. And that's why it's important to have a community. Go read Share Your Trades. Go read introductions. There's an introduction channel as well. Go read. So you are able to see, hey, this person is somewhat similar to me. I am able to place myself between this person, and you learn from that person. And when you share your trade, you help another person as well. So you can learn from me some things, but not intimately, there are things, some of you can. Some of you are probably at that level now, right, with that sort of experience. Great. Then let's get intimate, right? You can learn very intimately from what I'm telling you. But otherwise, a lot of times, what I'm teaching you now is a very general statement. It's a principle. It's a training parameter. It's not intimate yet to you. It doesn't speak to you personally yet. Someone else can do that. And that's how we cascade our knowledge. That's how we cascade our experience together in this community like that. That's the importance of a community, a trading community like that, right? So, nothing out of the picture here on this Thursday. Let's go to Wednesday. I want to take a look at Wednesday. Now, Wednesday is a great day. Wednesday, I don't have much to say. I've already talked a lot about that in the end of day summary, because this was a day that, if I'm not wrong, did I trade this day? I was providing a lot of analysis on Wednesday. So you have to study the end of day summary. This is important, right? Because there are lots of, this one. There are lots, so much to talk about on Wednesday here. Just review this. It will make more sense to you, including the video at the end of the day. Right? So Wednesday is a very important day. If you need to just do one day this week, Wednesday, go review it. Yeah? Right, Wednesday is important. Let's talk about Tuesday. Tuesday or something else going on. Let's see on Tuesday here. What about on Tuesday? Tuesday was quite a straightforward pattern as well, right? Let's see. I answered someone on Tuesday, something. Let me see if I remember. Was it Tuesday? What was it on Tuesday? I talked about boiling alive, yeah? So you see it for yourself, being boiled alive. I don't have much to say about Tuesday here. Credit spreads, yes. I want to have a proper lesson about spreads. But the point of spreads is very simple. When you take a spread, you're, in a way, minimizing your risks. Because firstly, you're paying a smaller premium. But in terms of credit spread, you're taking a smaller premium. You're taking the money. So your margin is more tolerable, right? So your margin requirements are much less. You are preventing yourself from the IV crush, right? Because you're selling and buying at the same time. So it's a net. You net out the effect of the implied volatility. You understand? Yeah, because you are netting it out, right? You're buying and you're selling both at very high implied volatility. So in a way, you are just trying to enjoy the intrinsic value. The only problem is your strike price, because once again, if you are that's not a problem actually, because if you're taking a credit spread, if you're taking something really out of the money and it doesn't get there, you make the money, isn't it? So it's not a bad thing to take credit spreads when you already know that there's a certain trend that's appearing. How do you tell if the trend is there? In the 30-minute chart is when you see stronger buying algorithms, right? Especially, this is a good tip here, after Here, let me just show you. Especially after breakouts. After breakouts, when we are in the buying continuation structure, usually it's great for credit spreads. All right. The other day that we had the breakout was here as well. So when the market already have the breakout, usually before it heads down, if it's not a clear rejection, before it heads down, it has to taper. You notice, right? So this taper, this orange here, you see, this is great time to take credit spreads. Now, obviously, in this case, you take a put credit spread, which means you want the market to head up and expire. Now, you don't necessarily want the market to head up. You either want it to head up or stay where it is, so you expire whatever that you're taking a put credit spread below. I love credit spreads. Why? Because say you take a put credit spread here, right? So say you take a put credit spread. Sorry, give me a minute. I need to drink some water. Give me a minute, yeah. I'm sorry, I'm back. Just do a simple example. It's a very, very simplistic example of a put credit spread, right? If this is too easy for you, don't worry. I'll sprinkle some tips so you don't feel that this is too basic for you. Right, so let's say 687p. Right, first question first, right? Simply, which contract is more expensive? Say we are here. Say spot is here. Right, spot is at 690. Right, so we're at 690 now. Which is more expensive? Quick test. Which is more expensive? 689p or 687p? Comments, please. Comments. Good. Test your brain. Yes, it's more expensive because it's closer in the money. Yes, 689p. So this is more expensive. So if this is more expensive, you're selling this, right? And then you're buying something that is less expensive. You understand that? You're selling something that's more expensive and you buy something that's cheaper. Now, this is important because this is important. If you can help it, don't buy something that is too out of the money. This is a tip here. You don't want to buy this below a key support level, right? Because this becomes your parachute. This becomes your emergency raft. This is important, right? Because if this just grinds up slowly, you're going to extract all the value. That's great, right? Especially if you have a smaller account. You can close this, but you cannot close this. You cannot close this. Why? Because if you close this, your margin will never allow you to be naked selling a 689 put. No chance. Your margin requirements will go insane. Right? So you have to understand that this is your safety raft. This one. All right? So don't go too deep out of the money. Don't. Right? And make sure that it is not... Well, in a way, yeah, you want it protected by some key support. Because let me explain. If, for some reason, this dumps, you don't have to worry, right? So let's say it gets to this point, you wait for structure before it starts dumping. If it truly dumps, and you see it happening, right? You have confirmation it dumps. Of course, this is simplistically saying, right, that it dumps. But you and I, we can discover how it dumps when we have the algorithms in play. What do you do? You close this. You buy it back. You buy back the 689p and you allow this to run. So you're always covered. You're safe. You understand that? That's the beauty of opening two-legged options. A lot of people open spreads just thinking, it's cheaper. Let's buy something because it's cheaper. Let's open the spread because it's cheaper. No, you're not fully maximizing the point of a spread, when you open a spread, you are actually trying to find ways and means to insure yourself, right? This is an insurance. If it truly goes all the way down, now you don't just have a maximum loss on this, right? You are able to even profit from this because you are able to make adjustments on your trade. So understand that. Now, if you can, now for those people who can afford to do this, you should open a second account just to do spreads. Do not do it together with your day trading account. All right, you do it just for spreads. Why? Because for metric reasons, you want to be generating good metrics for yourself on the type of spread plays. So also introducing spreads into your plays, you realize you may not be able to do it every day, right? Not every day you can open a spread. But the point is, if you can, choosing between debit spreads and credit spreads, do credit spreads more than you should do debit spreads. Yeah, you want to collect money more. This is actually more advanced, I think, than just simply selling puts or selling calls, right? Obviously covered, you have to be covered. I think this is a lot harder, spreads. So I will teach you how to be selling calls and selling puts first, covered, of course, before we go to spreads. The reason you do spreads is obviously because you don't have a large enough account to do it without covering the other end. But this is a good tip, yeah? So always remember you're buying the insurance. Always remember that. And as I have explained to you, once again, another tip here. Usually you buy put credit spreads. Put credit, which means you want the market to grind up. Because the market usually grinds up. The bullish behavior is that it grinds up. Or squeeze, right? You never truly see grinding down. Have you heard people say grind down? No. Usually they don't grind down. If it heads down, it heads down. Like it just you see it. You've seen it happen throughout the past month in March, right? If it dumps, it dumps. There's no such thing as, well, very, very unlikely it grinds down. If it's grinding down, it's actually building liquidity to head up, right? So you understand that's market behavior. Once again, context, and you apply context to your technical analysis. Of course, it's not 100% that grinding down doesn't exist, but you see grinding up more, and you see dumps more. So you put two to two, and you understand that, hey, put credit spreads are actually more versatile than taking a cold credit spread, because you're fighting against the market if you're taking cold credit spreads. You can take covered calls. Yes, that's a viable strategy together with the upper Bollinger. I will teach you that next time. But as you can see, you may get capped, and you must have enough liquidity to withstand this if you're rolling it up all the way, right? Because your cost basis will be very affected by that. But that for another time. Okay? So understand this. When you understand this better, you're able to deploy this as part of your trading arsenal. Right? Understand? Good. So that's the Tuesday lesson I want to talk about. So if you can, start opening a second account. Make it a small account. Start practicing or you can even do paper trading, right? Open a new paper trading account. Start practicing your put credit spreads. You understand the context, how to be using it in a 30-minute chart, for example. I just taught you that. So start practicing. You may not be able to do it every day, but you practice. You have a sense of how to be using that in your trading arsenal. Did I trade on? No, this was Friday. All right. So this was Monday. Monday was quite straightforward. Monday was an easy day, man. Let's see Monday. Let me see what was there that I wanted to talk about on Monday. Monday was quite straightforward. Clearly because of the magenta here. Once again, no reason to short this. Remember, throughout the entire 5 days last week, right? It was a great 5 days. It was easy on the portfolio. It was, I wouldn't say it's easy day trading. It's never easy day trading, right? You have to be at good focus. But it's not necessarily good for runners as well. But yeah, if you held on, that's great. I wouldn't hold on because it's not truly a trend day. You were still building liquidity, plenty of entries you could have taken. But you notice something, right? As I talked about, if you remember, we always talk about the magenta, or in this case, I use magenta as a representation for a strong bearish control, right? So this is still a buying algorithm. Don't be mistaken. But usually the bears will use this buying algorithm to control the liquidity, right? That's what I'm trying to say. Now, you notice that once we charted the bearish control, it is always, as I always tell you, it's an indication if the market wants to short this. And you realize whenever we are not threatened by it, you just practically no reason to short this, right? So for those who are just full porting against the market, you will find yourself in a lot of trouble. So once again, this is a form of training. You need to train yourself against such irrational behavior. So training protects you, right? Good training protects you. For people who are in sports or in professional craft, I use flying as an example because I do, right? So for pilots out there, right, if you're flying, right, your training protects you from making stupid decisions, from illogical, irrational decisions. And that's only because you train. Likewise for sports, right? If you have proper training, it prevents you from doing a technique that will cause you major injuries. It's the same idea, right? So train every day. It will help you, prevent you from making stupid decisions on the trading floor, in this case, right? So training is always the best insulation. Please remember that, right? Wherever you go, whatever you do, training, practice is your best insulation. We are human beings, right? We learn through repetition, through training, through practice, right? So, all right, Monday was an all right day, right? But I just wanted to talk about the right, once again, Tuesday, right? So you have the bearish control. Look, no reason to short this. Absolutely no reason. If you're looking for zombie trades, right, that's another thing altogether, right? Yeah, there are zombie trades, but it's a different animal. You use different risk parameters, right? You use different trade techniques. So, yeah, I talked all about that in previous trading videos if you have not watched it. Once again, give me some time. I'm archiving stuff. I'm using AI tools. It's taking some time. My developer went for a holiday. I think it's the last chance they can ski. So yeah, you get the point. So it's been away for a while, but I've got some updates. They've been working quite hard since coming back. So yeah. Anyway, once again, magenta. You have magenta. No reason to short this. Right, this was Wednesday, and see it for yourself. So the point is, you see it for yourself. You learn because you've experienced it, right? So you've experienced it together with me now. You see it for yourself. You have learned. It becomes personal for you now. Right, so yeah, there you go. I didn't chart on Thursday, but if I were to extend this, let's just extend this. Yeah, you could have shorted this still, right? Yeah, maybe. Yeah, look, your best short was here, and it would have made you money. Why not? Even this one. This one's tricky, man. Now, would I have prevented to short this? Yes, I think I would, because you would have your pink algorithm here. If I'm not wrong, let's just chart it out. I could be wrong. Yeah, there you go. Right, there you go. I would have charted the pink here. So this would have prevented me. This one was even better. Take a look. This is beautiful. So you know the pink exists. You know the pink is there. The pink is probably doing some danger there. Right? This is beautiful. Right? I think there was another rhythm here. Maybe teal. Let's see if teal works here. And that teal's not that great here in this context here. Yeah, teal's not that great. Maybe like that. Yeah, all right. Have we shorted this here? Possibly, yeah. This may be difficult. If you shorted, I would have shorted this here. I've taken your profits as much as you can, protect the trade before it bounces up, right? If you're protected, you will probably see magenta before it starts heading down. You must have protected more by then because you see it so close to where the pink is. I would have charted the pink here. I think I would have charted the pink here. So this would have been more meaningful. Yeah. So you see, I'm not there on that day, right? On the second half. It's very difficult for me. This is all on hindsight, right? But you see how applicable this still is, even on hindsight. But I cannot tell you that, hey, this is what I would have done if I weren't there charting. But you have the luxury of every other day that I'm here. Right, so review if you can every single day. It's difficult to do it over the weekends and do every single day, right? It's difficult. So just spend half an hour every day to do that. All right. Now, I think I'm done. Let's just, let me see. Let me just review my notes, see if I've forgot anything. Thank you for tuning in anyway. This is live, by the way. So yeah, I'm here with you on a Sunday. Thank you for being here. All right, I think I'm about done. I would love to do a proper Q&A another time. I'm still thinking how I can do proper Q&A, right? We have some channels. You can do them here at the meantime. I want to have a proper Q&A, something that is more topical, right? So I intend to do that, but a more topical one. But anyway, thank you for tuning in. It's been 2 hours. Thank you for staying along. All right, I hope today helped you. I personally felt that there were a lot of tips that you could have gathered from today that I would not otherwise have the opportunity to show you. So credit spreads was one. The final 10 minutes for this was one, right? The intern candle, the intern trade was one. The squeeze was another one, right? So understanding squeeze, understanding context. So today I talked a lot about context, about experience, about hijacking experience, about market cycle, right? So I think that's plenty to go around. Enough for you to mull over it for an entire week if you can. Now, trading is a long game, right? It's a long game. You're meant to do this for the rest of your life. Yeah, if you're embarking onto this, obviously you want to manage your own money for the rest of your life, not just day trading, right? Money management, you have to do it for the rest of your life, like it or not. If you don't do it early, you will struggle when you're older and you don't have the ability or the systems to do it. So I would think you want to do this for the rest of your life. And if that's the case, take your time to learn this. Don't rush it. You have the rest of your life to do it. Don't start being reckless and losing money. So you'll see when you put things in perspective, when we do it together, when I remind you, when I tell you there's a roadmap, when I show you the way, when not just me, but everyone else around you also show you the way in the different stages of their progress. You see it for yourself. We trade together. We show up together. I spend more time with you than my family. I always tell you that. And that's the truth. That is the truth. The point is, we show up for each other. We help each other. This is a journey. So don't rush this. This is a journey. Take your time every day. Show up a little bit, right? We learn from each other. We help each other. To some of you, this is your life. Like me, I'm feeding my family. That's my primary goal. That's actually my primary role in the family. I have to do this. This is my life. Likewise for some of you, right? Some of you are learning this. This is a secondary part of your life. Some of you have a day job, so this is a secondary part of your life. Regardless, we all have different functions and different stages of our lives, but we put in all our 100% in the different tasks that we have. But you just have to be clear. Where are you? How to be apportioning your time and your resources, and you do this carefully. So we got this. I try to simplify this to the point that regardless of your life stages, you can do this. Regardless of what you are, you're a full-time trader or you're just taking a trade a day, you can use this skill and stack up and do this. So you see the entire curriculum, you see the entire system. I try to tune it as much as possible that it helps everyone, right? And when it helped you, you can develop your edge even sharper from there, right? You can build something that suits you with the same framework. So do that. Have some sense, have some logic, have some rationality in your life. And that's what I'm trying to tell you. And you are kept accountable when you show up every day. So the secret, the true secret in everything in life is to show up every day. Your family as well. You show up every day for your family, you will find success, right? You show up every day and the task that you're supposed to do, you will find success. Good days, bad days, you show up, you will find success. That's just how it works, right? That's life in general. And I like that because that's a very high barrier. You'll be surprised that many people cannot even fulfill that criteria. They cannot even show up. You'll be surprised. There are many people that are like that, and they will not succeed. You and I were different, right? That sort of consistency, and that's what the market wants. If you want consistent results in the market, you have to act consistently. What's more consistent than showing up every day? Yeah, there you go. So show up, not just in trading, right? As you trade with me every day, you realize I always like to relate it to life. Because if you're not living it in your life, it's unlikely you can reflect it in your trading. You know what I mean, right? If you're not a patient person, right? If you're impatient, unlikely you're going to be patient on the trading floor. The trading floor will make it worse for you. And if you're not patient, what's causing you to be impatient? Stress? Yes. Right? Deadlines? So the thing is, fix that. And when you come to the trading floor, it will relate better. So if your trading cannot relate to your life and vice versa, then you will have that sort of dissonance. And you have to gap it. You have to find a way to close that gap. And you will become a better trader, a better person. Right? Such is life. Don't live a double life. Right? If you're having struggles at work and at home, you realize it's because you have a dissonance. You're not fulfilling the same identity at your work and at your home. Then find a way to close the gap. Because when you can be the same person at work and at home, you will do very well. Because you're living that identity. You have a breeding platform to excel in that identity. Right? So show up every day. We've got this. I'm here. You're here too. Right? I'm here because of you. Right? If you don't exist, I will probably not appear. But I do it now because it's a commitment to you. Likewise, if you've committed to this, to each other, to me, to God, then you have to show up. You have to show up. Once in a while, all right, you take a break. Yes, acceptable. Or you have something on. Yes, acceptable. I have that too, right? We have lots to do in our lives. This is not all that we have to do. So we have to take breaks sometime. Yes. And for those who struggle, right, who have been struggling, you've been having red days after red days, you don't follow your rules, my suggestion to you is to stop trading. That's actually your secret as well. Stop trading. Just show up. Likewise, showing up doesn't mean you have to trade. Show up means you start sending memes to encourage another instead of trading. Hey, why not? So stop trading, but you can still show up. Study. That's what you need to do. All right, so we've got this. You've got this. It's only April. We've got a long way to go in the year. And what's stopping you? Truly, what's stopping you? Defeat that thing stopping you then. Defeat it. Defeat it. What's so hard about it? What's stopping you? Defeat it. Get up on your feet. Right? You reload whatever you have. Reload your punches if you need to. And you go defeat that thing that's stopping you. What's stopping you? Defeat it. What's so hard? Right? We have show up. All right. Showing up is the first way you tell whatever you're facing that you have won. When you show up, you have won. Believe me. You show up, you have won the battle. You show up, you won. Show up. All right. For those who can't wake up to trade, you show up. Whatever it is, you set your alarm clocks. You show up. 30 minutes, that's fine. Then you go back to sleep. Fine. Show up. You won the battle. At least the first part of the battle. Right, I know many of you have struggles. Everyone has struggles. But you show up, all right? You show up. Trust me, trade with me every day, every morning. Trade it with all of us, yeah? Right, do the reviews, just half an hour a day. You will realize how much better you will become. One trade a day, as I always tell you, keep it minimal. One trade a day, you will realize so much better you become. Take your profits, you see profits, you take the profits and you stop trading for the day, you paper trade, you will see how much better you become. Right? Money in the pocket. Once you have money in the pocket, believe me, once you start making money, you make money in the pocket, you will become better each and every day. So take the profits. Some of you don't take profits. You let something green turn to red. I don't understand. If that's money, it just tells me you don't need money, man. That just tells me that. Hey, I need money. I need to feed my family. I've been hungry. I've felt hunger. Have you felt hunger? You give me money, I'm grabbing it. I'm taking it. You need to suffer then. Then your problem is to suffer. Go suffer. Suffer. Go suffer and get better. Fight the battle. Show up. Suffer. Show up to suffer if you need to. All right. So anyway, that aside, I truly want success for most of you. Right? Some of you are haters. Fine. I want success for you too, actually. I really do. Because with success, you hate less. The hate is not a true representation of who you are. Right? So, frankly speaking, if you're here, I want success for you. Unless you're taking your money and ruining the world, or you're running some illegal crime ring. I don't know. In that case, I obviously don't want your success. But the point is, I want your success. I do. I truly do, especially people who trade with me every day. I see you. I read your trades. I know your struggles. Some of you share beyond trading. I see it. I even know what you ate for breakfast this morning. I want your success. I truly, truly want it. That's why I'm here. I can't be wanting your success more than you. You've got to want it more than I want it for you. You see. So use me as a standard. If I want it as much or harder than you, you will not succeed, my dear. You've got to do more than I'm doing. Are you doing more than I'm doing? Some of you, right? I mean, I get unfair criticism sometimes, right? I take a 2-hour break and I get crap for it. How much more time do I spend than you, my dear? So my question is, are you wanting this success more than I want it for you? Then put in the time. Put in the work. If I'm making videos every day, you need to make videos for yourself every day. Can you make a video to review? And you wonder why am I better than you? Well, for many different reasons, obviously, but The more important reason is I work harder than you do, even when I'm already at this stage of my life. Don't be complacent. And this is why for early members, if you remember, I said this. I said that you saved my life. And I mean it. Because without you, I would not have learned humility, And this humility has helped me. It has helped me. Without this, I don't think I would have done well after the surgery. But my training protected me. My training, the consistency in the type of systems and discipline I have put myself in every day has saved me. I mean, you've been here with me, most of you. You realize I'm a different trader now after the surgery. You realize that, right? Yes, you have. You realize that. I used to be so much more aggressive. I used to be, I used to enjoy a lot more trading. I used to. The surgery has been tough. This recovery has been tough for me on the trading front. But we still do it, right? I still do it. I still show up every day, right? Making money is not just a thing, right? If you're doing this long enough, I want the excitement from trading. I still do, I mean, I came from a very high octane world of finance. So I want excitement. I still want it. But I am humbled now that I cannot do it. I have to be taking very conservative trades. And somehow I feel that this is the season of my life to help many of you who have to be more conservative. You realize I've stopped taking zombie trades. Some of you realize that. Very, very far in between. I'm not fast enough anymore. That's just how it works. Sometimes I am well prepared. This is a season in my life that God is challenging me. I will recover. I will recover fully, for sure. I've not been flying to, I can't. My medical condition doesn't let me do. I can't do a lot of things that I enjoy. But what I do, I show up because I have to. You know this is important. You have to do it. You understand that? Yeah. So, this is a stark reminder to you. How much do you want this? And there you go. So anyway, I would encourage you to make videos, yes. And I have a program where you can benefit from it. You can make more than I do if you do it your own, right? So capitalize on that. And it's a commitment to me to show you how much I want you to succeed. All right, so use the resources that I have here. Go ahead. We are a team, right? Use what I have given you and make good money for yourself without breaking the law, without stealing, without plagiarizing, right? You're using it for the same purpose that we are at, because you share my values, you share my principles, and we are continuing as a team together, right? All right. 2 hours. Perfect. Thank you very much for watching. I'll see you closer to opening bell, and let's see what happens at 6 p.m. I'm quite curious. But be careful. Remember, as I tell you, if you're trading pre-market, please don't blow everything before US opens, yeah? So please, regardless of what volatility there is, you have to be very, very aggressive in protecting your trades, yeah? Thank you very much. I'll see you. Goodbye. Thank you once again. Thank you. I'll see you closer to opening bell.